My name is Edward James. I'm the Director of Content Analysis at MEED Projects. And over the next 15 minutes or so, I'll be giving you all an update on the power projects sector market in the MENA region, looking at some of the key projects, as well as looking at some of the trends surrounding the sector. So without further ado, let's move ahead. Okay, so before I start, I just wanted to highlight a couple of things and the source of the data that you'll find in this presentation. This presentation is quite data intensive, and it is sourced from the Middle East Energy Transition Report produced by MEED. This is a report that covers all aspects of the power sector in the MENA region. If you want an incredibly detailed and comprehensive outlook and overview of the power market in the region, then you need to look no further. You can find that on our website, meed.com. And with regards to project sector data, then the data is sourced from the MEED Projects project tracking service, which covers all major projects in the region. If you want to find out more about that, then please visit our website, meedprojects.com. Okay, let's start off the presentation by looking at supply and demand figures for the region, because clearly when we are looking forward at the size of the project market, then we need to understand what the future supply balance and demand balance will be, to understand what the quantum of future investment spending will be in generation and transmission and distribution. So as we all know, the power growth in the region has been quite substantial over the last decade or two. We've seen a large increase in population, but following on from the increase in oil prices at around the beginning of the millennium, we've also seen very strong economic growth and strong foreign investment into the region. And the two combined, the economic growth and the population growth, have combined to ensure very strong demand growth for power and water over recent years. You can see here that this growth is forecasted to continue. According to global data, the power consumption in the MENA region is going to rise from close to 1,200 terawatt hours in 2015 up to close to 1,600 terawatt hours by 2030. And that is a compound annual growth rate of 2.25%. That's very strong growth. And of course, when you've got such strong power consumption growth, then you will also need to have a strong supply growth as well, which is something we'll look at in the second half of this presentation. And you can see, taking that same data and looking at it on a country-by-country basis, you can see that consumption is the four largest markets in terms of consumption in the region are Saudi Arabia, Iran, and Egypt, and the UAE. Perhaps not surprisingly, they tend to have the largest, well, with the exception of the UAE, they have the largest populations in the region, and therefore they've also got the strongest consumption and demand as well. And you can see that demand for the next 5 years and then the next 5 years after that, all pretty strong, with the exception of some markets where we expect demand growth to level off in the face of conservation measures and greater efficiencies of demand. So to keep up with that very strong consumption, supply and demand growth, there would have to be a requisite increase in total installed power generation capacity to serve that increased demand. Again, we are forecasting total installed capacity to reach 617 gigawatts by 2030, up from about 430,000 megawatts or 430 gigawatts today. That's a compound annual growth rate of 3.7%. And that is a very significant increase in power capacity that will require tens, if not hundreds of billions of dollars in investment in new power generating facilities, which we'll look at in a sec. So if you wanted to look at in more granular detail the specific data for each country in terms of what current installed capacity is compared with what it will be in 2030, along with what percentage of that will be renewable energy. Then this graph, this table here shows, gives all the information that you need. You can see here that the largest future market in terms of total installed capacity by 2030 will be Saudi Arabia with about 123 gigawatts, followed then by Iran at about 108 gigawatts, and then Egypt at 82 gigawatts. Now, perhaps the most interesting aspect of this table is the installed renewable energy capacity. Now, we all know that each country in the region has very ambitious renewable energy targets to hit by 2030 as part of the ambition to be net zero carbon producers. And this graph, this table here illustrates that. Saudi Arabia by 2030 is expected to have about 25 gigawatts of installed renewable energy capacity, primarily solar. Then we have Egypt with about 13.7 gigawatts, up from 3.5 gigawatts today. The UAE at 14.8 gigawatts, up from 2.5 at the end of last year. So you can see that across every country, there are some very ambitious targets, and we can see overall more than 50 gigawatts of installed renewable energy capacity by 2030. And this is a major step change from the current situation. Although we've seen large investments in last 5 years or so in solar energy in particular in the region, we're still at a fairly low level overall in comparison with total installed capacity. This is going to change in the next 10 years, and I'll illustrate that further in the next couple of slides. So that's the demand and supply data. How does that translate into actual project expenditure for the power sector? Let's just first, before we look forward, just take a look back over the last decade. And for the last 10 years, we can see that a little over $268 billion worth of contracts were awarded for both generation and transmission distribution market in the region. By far and away, the largest single market is Saudi Arabia, with about 25% of total expenditure over that time, followed then by the UAE at nearly $40 billion, and Egypt at $30 billion, and so on. See here on the right-hand side the split in the pie graph between the different markets. So we've already seen a huge amount invested in generation and transmission distribution in recent years. And in terms of how that split has been spent by a different segment, you can see that the majority of it has been spent in allocated towards oil and gas power plants, i.e. Fossil fuel power plants powered by fuel oil or natural gas. So that's been the majority of spending has been for power generation has been in those types of power plants. Substations seen nearly $50 billion worth of investment over the last decade, and cables and overhead lines more than $20 billion. Solar farms, solar power facilities, PV and CSP are the most common and attractive renewable energy type for the MENA region, particularly in the GCC. Outside the GCC, we do see more wind farms, but in recent years, it's been solar power that's tended to dominate. We've also seen, of course, nuclear power investments in Iran and Egypt, and we might well see Saudi Arabia venture down that path as well in the next few years. Overall, of the $268 billion spent in the last on projects in the power sector over the last decade, $173 billion has been in generation, or about 72% of the total. 68 billion, 28% has been in transmission distribution. Now, of the $173 billion in power generation projects, 30% have been in renewable energies, and $124 billion in oil gas fired facilities, or coal as well. In terms of the key projects currently under execution, well, the largest single project is the 950 megawatt Mohammed bin Rashid Al Maktoum solar power plant and CSP facility in Dubai. This is the world's largest single site solar complex, obviously multiple phases, both PV and CSP, and that's well underway now, and is part of Dubai's ambitious target for its renewable energy generation capacity, which it hopes to hit by 2030. Then we've got a range of other interesting power plants across the region. We've got the recently awarded Al Khaydat thermal power plant in Karbala, which is being implemented by CITIC out of China. We've got the Hassyan coal-fired IPP, which is also in Dubai, which will be operational shortly. We've got a massive hydropower plant in Ataka in Egypt, and so on. You can see here we've got a wide range of mix of different types of facility, some gas-fired, some oil-fired, some hydro and solar, and so on, and across different markets. Overall, we've got more than a dozen projects worth more than $1 billion each. As I mentioned, CITIC has won a raft of contracts in Iraq recently, and it is by far the largest single power sector contractor in the region as a result. We then got some other very familiar faces: L&T, GE, Sino Hydro, CMEC, Samsung, Shanghai Electric, and so on. But I think what's interesting most of all is the emergence and dominance of Chinese contractors when it comes to power projects in the MENA region. 10 years ago, we're talking about Korean contractors. 20 years ago, we're talking about Japanese contractors. Today, we're talking about Chinese contractors winning a large share of the work in the power market at the moment. Top clients currently for projects underway in the MENA region. Well, we've got Rosatom and its El Dabaa nuclear complex in Egypt, which is the largest single project. The Iraqi Ministry of Electricity, with the aforementioned Al Khaydat and Karbala power plants. We've got a number of other major power projects in Iraq, which is making it second ranked in this table. DEWA, of course, Repdo, the renewable energy client in Saudi Arabia, SEC, GCOL, and so on. And of course, as you can see from this list, the majority of power project clients, of course, government utilities, in keeping with a fairly public sector dominated aspect of the market. Although, of course, many, if not most, power projects now are ultimately developed by the private sector. Now, in terms of the future pipeline, there are more than $300 billion worth of known, planned, and unawarded power projects in the MENA region. And that obviously compares nicely with the $268 billion awarded over the last 10 years. So there's at least the same again in the pipeline. Again, Saudi Arabia leads the way with close to $100 billion worth of known future projects in the power market, followed then by Algeria, Egypt, Kuwait, Iraq, UAE, Morocco, and so on. Now, interestingly, for the first time, the majority of projects are renewable and alternative energy schemes. So close just under $200 billion of the $300 billion future market are renewable alternative energy projects, solar farms, wind farms, and so on. You can see on the right-hand side, $100 billion of that $195 billion is solar projects. We've got $71 billion of nuclear projects, and then $69 billion of oil and gas-fired power plants. So unlike the last 10 years, where only 30% of future project spend was in renewable energy, going forward for power generating capacity, 73% of future spend will be renewable in the renewable sector. This is clearly illustrative of the change in policies that have been implemented in recent years as governments shift from gas-fired production primarily to renewable energy, particularly solar energy. So this is a perhaps the biggest single shift in the sector and in terms of the projects market going forward. And then just to illustrate in terms of what are the current active projects in the market out to bid, well, we've got the Talfuk 1 renewable energy program, Algeria leading the way. We've also, in terms of other renewable energy projects, we've got the wind power program in Lebanon. We've got the Aras solar power facility from Repdo in Saudi Arabia. We've got MENA solar 2 and 1 IPPs in Oman. In fact, we've got 11 of the top 20 future current projects in the market are currently are solar power projects, illustrating just how predominant this type of power generation has become in light of increasingly lower prices and increasing attractiveness as a result. We've still got a couple of traditional gas-fired facilities, for example, Facility E, IWPP, 2,600 megawatt capacity is currently out in the market and under evaluation in Qatar. And there will still be room for gas-powered baseline capacity in the region as well. However, as you can see here, the renewable energy, particularly solar power, is beginning to dominate. Longer term, this is a list of the top 20 longer term projects in the MENA region. You can see it's dominated here by the nuclear power program in Saudi Arabia. KCARE recently received bids for the advisory contract for its nuclear power program. I believe Ernst & Young is low bidder there for that. And we expect to see more developments for the nuclear program in the kingdom over the next 2 to 3 years, and get some more concrete idea of what the objective will be. We also got the massive 22 gigawatt renewable energy program in Algeria, of which Telfut 1 currently in the market is a part of. We've got the long-awaited Al Zor North IWPP, or gas-fired project. We've also got 2 mega gas-fired power plants to be implemented on an IPP basis for SPPC in Saudi Arabia. Nonetheless, you can see here a very large number of very significant projects across different markets, different fuel types. And then finally, who are the top future clients? Well, this again reflects the previous list of projects. KCARE in Saudi Arabia, King Abdullah City of Atomic and Renewable Energy, will be the largest single future client if the nuclear power plans crystallize, come to be. Then we've got the Sonogas in Algeria, renewable energy program there. Repdo out of Saudi Arabia, of course, with its ambitious renewable energy programs. CAP, the IPP client, and IWP client in Kuwait. SEC, of course, the region's largest utility, and so on. Again, you can see here most of these are government utilities that will be tendering projects, many of which will be on an IPP or IWPP basis. But as you can see, the government is it will continue to be the main instigator of projects going forward. So all in all, a very optimistic picture for the projects market for the power market going forward. More than $300 billion worth of known future projects, of which renewable energy is going to take the main share, which is of course the most significant shift that we've seen in the market. Thank you very much for your attention, and I hope you enjoy the rest of the summit. Thank you very much.